Welcome back to the deep dive. Today, we're diving into a topic that's, well, it's caught the eye of investors for centuries and is definitely making headlines again. Silver. We've sifted through a whole stack of research on this precious metal, and our mission today is to really pull out the most important nuggets, helping you understand its unique appeal.
That's right. When you think about investing, stocks and bonds usually jump to mind first. But silver, it offers some really distinct advantages. We're going to explore what makes it so valuable, both, historically and in today's market. And then we'll unpack the different ways you can actually invest in it, along with the crucial risks to keep in mind.
Okay, let's get into it. Our sources highlight several pretty compelling reasons why silver might be a smart addition to your portfolio. We're talking about more than just, a shiny metal here. So let's start with its fundamental nature. Benefits of investing in silver, more than just a pretty metal. First up, this idea of silver as a tangible asset, something with intrinsic value. What's fascinating here is that, unlike digital stocks or bonds, you can literally hold silver in your hand. How does that tangibility translate into actual value for an investor?
Well, silver's intrinsic worth comes from its long history as actual currency, and importantly, its ongoing demand across various industries. This physical nature, it provides a kind of security that paper assets often just can't match. Makes it less vulnerable to, say, the wild swings you sometimes see in the stock market. It's proven to be a reliable store of value, especially when the economy feels a bit unstable.
Right. So it's not just about looks, it's about what it is. And that ties directly into its role in portfolio diversification. Why is spreading investments across different asset classes so crucial, and how exactly does silver fit into that picture?
Yeah, diversification is really a cornerstone of smart investing. I mean, fundamentally, it reduces risk and can even enhance potential returns over time. Silver fits in perfectly because it often doesn't move in lockstep with stocks or bonds.
Ah, okay.
So this means that when traditional markets might be down, silver can often hold its value, or sometimes even increase. It provides this layer of protection against market downturns. It really complements traditional investments by offering a different kind of stability.
Okay, now here's where it gets really interesting for a lot of people. Silver as a safe haven asset during economic uncertainty. We hear that phrase thrown around a lot, but what does it truly mean when we're talking about silver?
Well, when economic uncertainty really hits the fan, wreaks havoc on financial markets, investors naturally look for assets that could protect their wealth. Silver, with its long historical track record, is definitely one of those assets. Its ability to retain value during downturns makes it a pretty reliable choice. When stock markets are volatile, currencies might be losing value. Silver often shines as a stable, secure option.
Makes sense. And speaking of protecting wealth, our sources really emphasize silver's role as an inflation hedge. How does silver actually combat that erosion of purchasing power that inflation causes?
Right? Inflation eats away at the value of your money, doesn't it? But silver has historically shown it can maintain its value and often actually appreciates during inflationary periods. So by investing in silver, you're not just trying to preserve wealth, you're potentially setting the stage for growth by shielding your financial future from those rising prices.
It also seems incredibly liquid. Is it really that easy to buy and sell if you need the cash?
Oh, absolutely. Silver has really high liquidity. That's largely due to the consistent demand in industries like, electronics, solar, jewelry. This means investors can typically convert silver into cash relatively quickly without suffering a significant loss in value. It offers a lot of flexibility as an investment.
Okay, so we've got tangibility, diversification, safety, inflation protection, and liquidity. Does it also hold its value reliably over the long term?
Yes, generally speaking. Unlike some assets that can fluctuate wildly and maybe never recover, silver has a history of maintaining its value over time. This stability is honestly one of its greatest strengths, especially for investors looking for a long-term hold. Its value retention is really tied to that intrinsic worth and the ongoing industrial demand.
And that leads us to a really unique point our sources bring up: silver's dual role in industry and investment. What does that mean for its overall stability and demand? Seems quite different from, say, gold.
It is quite different, yeah. This dual role is a significant safety net for investors, you could say. Silver isn't just something people invest in. It's essential across multiple industries. Think electronics, healthcare, renewable energy. Its conductive and antimicrobial properties are crucial.
Right, like in solar panels and EVs.
Exactly. This widespread industrial reliance ensures a sort of baseline, consistent demand. And that demand helps support its investment value even during economic downturns when, Liquidity might dry up for other purely investment-focused assets. Strategies for investing in silver. Options to consider.
Okay, so we've established why silver is compelling. Now let's talk about the how. How do you actually invest? Our sources outline several strategies, and it's definitely not a one-size-fits-all kind of thing. First up, the classic choice. Physical silver versus silver ETFs. What are the key differences there? What should someone consider?
Right. So physical silver means you're holding actual coins or bars. It gives you that tangible security we talked about. You feel it in your hand. But you then need to think about safe storage, insurance, authenticity.
Practical stuff.
Exactly. Silver ETFs, on the other hand, they offer convenience and flexibility. They trade just like stocks on exchanges, so no need for physical storage yourself. However, and this is fascinating, our sources point out that very few investors actually read the fine print, the extensive conditions of these ETFs. And those conditions often give the supplier considerable rights to default on the contract under certain, let's call them mitigating circumstances.
Defaulter, even if it's tracking silver.
Potentially, yes. It highlights a crucial counterparty risk with ETFs, the risk that the entity backing the ETF might not be able to deliver.
Wow. Okay, that's a really critical detail for our listener to be aware of. Good point. So beyond owning silver directly, either physically or through an ETF, what about silver mining company stocks?
Investing in mining stocks means you're buying shares in the companies that actually dig silver out of the ground. Now, there's potential for significant returns if the company does well operationally, finds new deposits, manages costs efficiently. But it's vital to research their financial health, their debt levels, their production capabilities.
So it's not just a bet on the silver price itself.
Not at all. And this raises an important point. While mining stocks can yield big returns, especially when silver prices rise, they also come with higher risks. You've got fluctuating silver prices impacting their revenue, yes, but also geopolitical uncertainties, operational problems like strikes or accidents.
Right.
Diversification within mining stocks or balancing them with other silver investments is pretty crucial there.
And what about a more maybe managed approach, like silver-related mutual funds?
Yeah, those funds pool money from lots of investors to buy a whole range of silver-related assets. That could include mining stocks, ETFs, maybe even some physical silver sometimes. A key advantage is professional management. You have experienced fund managers doing the research and making the buy-sell decisions.
So there are fees, right?
Exactly. It's crucial to consider that mutual funds usually have management fees, maybe other expenses, which will eat into your overall profits over time. So you always need to look at the fund's track record, its expense ratio, and its specific investment strategy to make sure it fits what you're looking for.
Okay. And then for the, let's say, more experienced investor, our sources also mention silver futures and options. These sound like they definitely come with higher stakes.
They absolutely do. These are financial instruments that let you speculate on where silver's price is going in the future. They offer potential for high returns, yes, but also come with significantly increased risk. With futures, you're agreeing to buy or sell silver at a set price on a future date. Options give you the right, but not the obligation, to buy or sell at a specific price.
That flexibility sounds useful.
It can be, especially in volatile markets. But these are really not suitable for everyone, particularly if you're new to the silver market. They require a solid understanding of how markets work and good risk management. Definitely not set it and forget it.
Makes sense. So for any of these strategies, timing your investments seems pretty critical. What market trends or indicators should we be watching based on our sources?
Timing is indeed crucial, though notoriously difficult. Silver prices get influenced by all sorts of things. Geopolitical events, currency movements, especially the US dollar, and of course, changes in industrial demand. One key indicator that our sources often mention is the gold-silver ratio.
Ah, yes, I've heard of that.
It basically measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, when that ratio is high, it tends to suggest silver is undervalued compared to gold, maybe signaling a potential buying opportunity.
And when it's low.
Conversely, a low ratio might suggest silver is getting a bit expensive relative to gold. It's not foolproof, of course, but monitoring this ratio can definitely help inform your timing and potentially boost returns.
And finally, circling back, if someone does choose physical silver, storage and security are obviously huge considerations. What are the main options and their trade-offs?
Yeah, you absolutely need secure storage to prevent theft or damage. You can store it at home, maybe in a safe, but that comes with security risks and might not be fully covered by insurance.
Right.
A safe deposit box at a bank offers more protection, but you might have limited access bank hours only. Then there are professional storage services, dedicated vaults, basically. They offer the highest level of security, often with full insurance, but they are, naturally, more expensive.
It's with a balance.
It is. You really need to weigh the cost versus the security and accessibility that works for you. Protecting that investment is paramount. Potential risks and considerations. What to watch out for.
Okay, so like any investment, silver isn't a guaranteed win. It has its risks. Our sources highlight a few key things every investor really needs to be aware of. Let's start with volatility in silver prices. How significant are these swings we're talking about?
Yeah, silver prices can definitely experience significant fluctuations, sometimes quite rapidly, even over short periods. These swings are driven by all those factors we mentioned: changes in market demand, geopolitical events, shifts in investor sentiment, even speculative trading. Now, while this volatility can present opportunities for profit, if you time it right, it also very clearly increases the risk of losses.
So how do you deal with that?
Well, to mitigate this, many experts suggest adopting a longer-term investment strategy. The idea is to try and ride out those short-term swings and focus on silver's potential long-term growth and value retention.
Okay, patience is key. We also touched on this earlier, but it really bears repeating because it hits the bottom line. The costs associated with storage and insurance for physical silver. How do these actually impact your overall returns?
They definitely do impact returns. These costs, storage fees, insurance premiums, they can add up over time and directly affect your overall profitability. So it's essential to factor them in right from the start when you're calculating potential gains.
And for the paper options.
Right, for things like silver ETFs. These costs are typically built into the management fees, the expense ratio. So while you're not paying a separate storage bill, those fees are still nibbling away at your returns. Always compare those fees across different investment options. It's crucial.
Good reminder. And finally, an area that's often overlooked, maybe until tax time. The legal and tax implications. What should our listener be thinking about here?
Yeah, this is important. Investing in silver can have specific legal and tax consequences, and they really depend on where you live and the exact type of investment you hold. For instance, in most places, capital gains taxes will likely apply to any profits you make when you sell silver. Different countries, even different states or provinces, might have varying regulations about reporting precious metals ownership.
So it's not straightforward?
Not always, no. It's really crucial to understand the rules in your specific jurisdiction. And honestly, seeking professional advice from a tax advisor or a legal expert, if you're dealing with significant amounts, is often a very good idea to make sure you're compliant and maybe even optimize your investments from a tax perspective. Outro.
So we've really taken a deep dive into silver today. We've explored its tangible value, its role as a hedge and a diversifier, that unique dual nature in industry and investment. And we've walked through the various strategies for getting involved, plus the important risks to keep firmly in mind. It's pretty clear silver offers a unique set of benefits for an investment portfolio.
Indeed it does. And understanding silver's unique properties, its history, and those different investment avenues we discussed, that's really key to making informed decisions that fit your own financial situation. And maybe this raises an important question for you, the listener, to consider. How might silver, with its actual physical value and that dual industrial investment role, specifically complement or maybe even enhance your own current investment approach? Especially when you think about its historical performance as a hedge against inflation and economic uncertainty.
That's definitely a powerful thought to leave you with, something to really mull over. Thanks so much for joining us for this deep dive today. We genuinely hope you feel much more well-informed about the fascinating and surprisingly complex world of silver.